Welcome back to Pennies TV with Kia, and this is a channel where we aim to dispel your myths, simplify difficult finance jargon, rectify your own personal problems while trying to entertain you as well. We are back with another video, and you know what we love to see? We love to see consistency. Consistency is key, and this video we're talking all about first-time buyer schemes. If you are a first-time buyer or looking to get a property ladder for the first time, then here are the schemes that you need to be looking at. We're going to be talking about three main schemes: the Help to Buy equity loan, shared ownership, and the first home scheme, which is the newest one to join the crew. There are a few others out there. We're going to focus on these three in this video. I'm also going to put the timestamps down below, so if there's one in particular you want to skip to, don't worry, I won't take offense. You can skip forward and click on that one and watch from that period to find out about that scheme. But without further ado, let's get into it. First one we're going to cover is the Help to Buy equity loan. Everything that we're going to talk about now is only applicable to England. So if you're in Wales or Scotland, I'll be putting all the links down below so you can click through and go and have a read. But everything in this video is applicable to if you live in England. The Help to Buy equity loan is a government-backed scheme aimed at helping first-time buyers get on a property ladder. And this is a really good scheme because, as I'm sure you know, for most deposits, if you're someone who's currently saving, I know I am currently saving for my first property, you're looking at about 10, 15, maybe 20% deposit to try and save up. With the Help to Buy equity loan, you only need to save up a 5% deposit, so much lower than maybe what you're looking at now. Obviously there are 5% mortgages out there, but for this scheme in particular, you're going to save up 5% for your deposit. And then what you'll do is you'll borrow between 5 to 20% from the government as an equity loan, which you're then able to put towards the purchase of your first property. So for example, if I say I've saved up 5% and I borrow 20% from the government, I've now got 25% for my deposit, and I'll just go to the bank and borrow the remaining 75%. Now that percentage is actually increased if you're buying somewhere in London. If you're in London, that percentage is up to 40%. You can borrow from the government to be able to purchase your first home. So as you can imagine, it is a loan, so it must be repaid, but for the first 5 years, you'll pay no interest on that loan. And then once you hit year 6, you'll have to start paying interest on that loan as you repay it back to the government. That rate is 1.75% and it increases every year by CPI plus 2%. So let's break it down with examples. I've thrown a lot of numbers out there, a lot of words, but let's look at an example. So let's say I'm going to buy a house that is worth £200,000 outside of London. I'll save up a 5% deposit, which is £10,000. And then I'll be able to borrow an equity loan from the government of 20%, which is £40,000. So put that all together with my deposit, I now have £50,000 that I can put towards the purchase of this property. Now remember, the property is worth £200,000. So I've got my £50,000 and I'll borrow the remaining £150,000 from my bank in the form of a mortgage. To be eligible for the scheme, you must be 18 and over, be a first-time buyer, and be able to afford the repayments and the interest on this loan. And you will not be eligible, and I mean not be eligible, for this scheme if you already own land or a home either in the UK or abroad. With all this being said, you don't have to apply alone. You can actually apply with other people as well, as long as everyone meets the eligibility criteria that I just mentioned. All sounds great. So now what can you purchase? Can you use it on any sort of property? The answer is no. In order to use the Help to Buy equity loan, the building or the property you're looking to purchase must be a new build. It must be sold by a Help to Buy registered builder, and it also, like I just mentioned, must be the only home that you own and live in. Now let's say you've heard all of this and you're like, you know what, I want to go ahead and I want to get my property. This is what I want to go ahead with. There is a maximum property price that applies to the property that you're looking to build. This varies depending on the region. So I'm going to go through, I'm going to put it on the screen. I'm also going to read it to you as well. If you live in the northeast of England, that maximum property purchase price is £186,100. In the northwest, that's £224,400. In Yorkshire or the Humber, that is £228,100. If you live in East Midlands or looking to buy in East Midlands, that's £261,900. West Midlands is £255,600. East of England is £407,400. London is £600,000. Southeast of England is £437,600, and southwest of England is £349,000. Those were a lot of zeros. That was hard to say. So that is the maximum value that your property can be that you want to purchase with the Help to Buy equity loan. So it has to be either that price or less than to use the Help to Buy equity loan purchase of that property in that area. It's also worthwhile mentioning that there are actually other fees associated with the Help to Buy equity loan. So we mentioned the interest earlier, which obviously has to be repaid once you come to year 6 of your equity loan, but there's also a management fee, and this is applied from the moment that you take out the loan. It's a £1 every single month that you have the loan until it's fully paid off. It doesn't sound like a lot, but let's say you have the Help to Buy equity loan for 25 years. It takes you 25 years to pay it off completely. £1 for 25 years works out to be an extra £300 on top, purely for having a Help to Buy equity loan. So something worthwhile to remember. There's also an administration fee attached with this Help to Buy equity loan. So this is only applicable if you make a change to your equity loan. For example, if you want to remortgage the property that you've got, then you have to pay an administration fee on top. And this is all on top of the fees that are already included when it comes to buying a house, such as solicitors, moving costs, all that good stuff. When it comes to the loan, you can make repayments at any time. You can choose to repay part or all of the equity loan whenever you want. But the minimum repayment amount you can make is 10% of the market value of the property. So now, if I say that the property I bought for this example is £200,000. Let's say now I've come to make a repayment. I'm gonna repay 10% of the property value. Now my house is appreciated. It's now worth £220,000. So I'm gonna be paying 10% of the new value. So I'll be paying 10% of £220,000 as opposed to £200,000 because it's appreciated. You pay 10% on the market value of the property, whatever it is at the time you come to repay. Now, there are only 3 conditions which mean you have to repay your equity loan in full. And these are, number 1, when you reach the end of your equity loan term. This is usually about 25 years, but once you reach the end, you must pay it off in full. Number 2, when you fully pay off your repayment mortgage. So when you fully paid off your mortgage to the bank, you must also fully pay off your equity loan. And number 3, when you come to sell your house. If you sell your house and there's still an amount to pay on the equity loan, you have to repay the percentage based on the market value or the agreed sale price of the property at that time, if it's higher. So for example, like I said, my house that I bought, my imaginary house I bought, is worth £200,000 and I borrowed £40,000 to be able to get it. That's how much of the equity loan I got. And I come to sell it and the house is now appreciated, brilliant, and it's worth £250,000. Let's say I still have 20% of the equity loan to repay. I've already paid off 20%. I've got the remaining 20% to pay off. Now I come to sell it. Because it's appreciated to £250,000 now, I have to pay back £50,000 to the government to repay off my equity loan. So we fully covered the Help to Buy equity loan and how it works. So who exactly is the Help to Buy equity loan for? If you're someone who's interested in buying a new build, this could be for you. If you're someone who's also looking to save up just a 5% deposit, not anything bigger, this also may be for you. And if you're someone who knows you can comfortably afford the repayments and the interest, this could also be for you. On the Pennies podcast, we also interviewed someone called Io, amazing woman. She managed to buy her first house by herself at 27 and she bought in London and she used the Help to Buy equity loan. Really great story to hear how she managed to do it and how she managed to save up. If you're interested in exploring the loan yourself and figuring out someone else who's done it, hearing their story and their journey. Now, the next scheme we're going to move on to is shared ownership. Again, this is only applicable to England. So if you're living elsewhere in Wales or Scotland, the links will be down below. So this is also a government-backed scheme to help lower income earners who otherwise maybe wouldn't be able to own a property get on a property ladder. And the way it works is it allows buyers to buy a share of the property and rent the remainder. It's also really important to note that shared ownership properties are leasehold properties, not freehold. And if you want an explanation of what that means, we've got one on the Pennies website. Again, you'll see here. You can visit the website and have a look. Link will be down below. So using numbers, let's have a look and see how shared ownership actually works. Again, let's say I'm buying a shared ownership property that's worth £200,000. So let's say I want to buy a 25% share in this property, which is worth £50,000. I still have to save up a deposit for this amount, which is £10,000. And then I'd get a mortgage for the remaining amount, which is £45,000. And then for the remaining part of the property, which is the 75% that I don't own, I would rent that. I pay rent to the landlord. There's also slightly different variations of the shared ownership scheme for older people and for disabled people, which again, I'll put the links down below if you fit into that category and you want to find out how that works for you. There's some eligibility criteria that must apply to you if you want to go through the shared ownership scheme. And there's 2 things. Number 1 is your household must earn less than £80,000 a year or £90,000 if you're in London. And number 2 is that without this scheme, you could not afford the deposit amount or mortgage repayments to be able to buy a property that suits your needs. And then if both of those fit you, also one of the following must be applicable to you. Number 1, you're a first time buyer. Number 2, you used to own a home, but you can't afford to buy a new one. Number 3, you own a home and want to move, but can't afford to buy one that suits your needs. Number 4, you're forming a new household, such as a divorce or a relationship breakup. And number 5, you're an existing shared ownership owner and want to move house. Now, this is only applicable to certain areas, but there are some shared ownership homes which are in designated protected areas, which means that you can only buy these houses if you have a connection to that area. And if you do want to do that, there may be some things to consider, such as number 1, you may only be able to purchase up to 80% share of that property. And number 2, you must sell your home back to the designated landlord. You cannot just sell it to anyone on the open market. So let's say you've gone ahead with that and you've gone through the shared ownership route. Once once you've got your shares, you can actually increase the amount of shares that you hold through something called staircasing. And you're able to buy a minimum of 5% shares each time. This may slightly differ if you bought your home in 2021, as you may actually be able to buy shares at 1% at a time. But this all depends on your landlord, so make sure to ask them to find out. Now, the cost of the share that you buy depends on how much your house is worth at the time. It will cost more than your first share if property prices in the area have gone up, and it will cost less than your first share if property prices in the area have gone down. If you want to buy a share of 5% or more, you'll have to pay for a valuation by a surveyor. Your landlord will let you know if they're going to arrange for the valuation to happen or if you need to do it yourself. Then after that valuation has happened, your landlord will let you know the price of the share. If you own a share of your home, the landlord has a right to find a buyer for that home. The landlord also has the right to buy the share first. But you can also sell your share yourself if the landlord doesn't want to buy it from you and can't find anyone to buy it as well. But if you own 100% of your home, you can go ahead and sell it yourself. It's also really important to note that not all providers offer shared ownership, and shared ownership is usually, pretty much always, on new builds. So who is shared ownership for? It's for someone who's looking to get on a property ladder and own a percentage of a property and be able to increase that percentage once they can afford it, and also someone who's interested in buying a new build. Now, the final scheme is the First Home Scheme. Launched in June 2021, this is the newest one to join the ranking. This is again a government-backed scheme to help first-time buyers and key workers get on the property ladder. And through this scheme, homes are discounted by up to 30% compared to market prices. And in some areas, this discount can be as high as 50%, which means you can save even more money on your property purchase. And the best thing about this scheme is it applies to these homes forever, meaning that generations to come, your kids, and their kids are able to benefit from this discount, and the local community as well are able to benefit from this for years to come. And with this scheme, like all the other ones, you need a 5% deposit to be able to purchase your property, but there is some eligibility criteria that you need to be aware of as well. Number one, if you're going to go through the scheme, you must be a first-time buyer. Number two, similar to shared ownership, your household income must not exceed £80,000 or £90,000 if you live in London. However, this can be lower, but it depends on the local authority. Number three, if you go through the scheme, this must be your only home, and you must be able to be eligible to get a mortgage for at least 50% of that property value. And it depends on the local authority, but sometimes the eligibility is you must have connections to the local community or key workers in the area you're looking to purchase in. It's important to note that even though this is for new builds, it's for a specific set of new builds. These new builds are called first home new builds to go with the scheme. So you can't just go ahead with any new build, it has to be first home new builds. Now, these buildings are being built all the time, and there are already some on the market, but again, due to this being a really new scheme, there's a lot more demand than supply at the moment. So you may find it quite hard to get on the scheme and benefit from it. But if you've heard all this and you're interested in applying, number one, what you need to do is have a look at the property that you want and double check that the builder is part of the First Home Scheme. If so, then of course you must qualify through the eligibility criteria. And if that's all good, then you can go ahead and apply through the builder. Now, who is this scheme for? It's for people who are first-time buyers or key workers who are looking to get on a property ladder, and for someone who's looking to purchase within England, because this scheme only applies to England. There isn't one for Scotland or Wales or elsewhere just yet anyway. Well, there you have it. Those are the main first-time buyer schemes if you're looking to get on a property ladder, all put down concisely, really easy to understand in one video for you. All the links of everything that I've mentioned is down below, so you can read further if anything interests you. Remember to go listen to that podcast episode about Help to Buy Equity Loan. Really great episode. She really explained her journey, and I think it's really useful if you're interested in that as well. If you're looking to save up for your first property, there's also the Lifetime ISA and Help to Buy ISA. It's been mentioned in the What is an ISA video that we've really got on our channel. And yeah, hope you guys are amazing. We're back again in the next video. Bye guys.